Palantir is currently sitting here trying to hold $17. And honestly, we have a pretty good short position that's setting up here. We're still holding on to this level of $17, which has been a good level of support over the past couple of weeks, but there are a couple of bearish things that we need to be objective about and that we need to note. The first is this rising wedge pattern that we are making at this moment. We also have two bearish order blocks that have come in, one sitting here from 1850 to about 1750 and another from 18 down to 1760. These are institutional buy and sell levels, which tend to act as strong supports and strong resistances. Now, the next thing that we can take a look at here is going to be the TTM, which is going to be at the bottom of your screen. What this TTM shows is basically when the Bollinger Bands are squeezing. If the Bollinger Bands are squeezing, it means that the stock is squeezing. And the longer that a stock squeezes, in this case, we've been squeezing since October 12th, the longer that it squeezes, the bigger, the more violent the release will be. I used this in an example yesterday in Tesla's video, talking about the squeeze we had on Tesla and how big the release could be after earnings. And as we see, that proved to be correct. So looking here, what we really don't want to see if you're a bull is going to be the break of $17. Now, if we hold under 17, there is no volume from 17 down to 16. You can see on the volume profile, which is this horizontal bar here on the right side of your screen. This is going to show you at what prices we have been seeing institutional buying at and selling, not just how many shares were traded in a day, but at what specific price are institutions purchasing and selling at. And when we have these thin areas, as you can see here from 17 down to 16, the stock will move, whether it's up or down, through that area very, very quickly. As an example, last time we broke through this low level of volume, we ended up running 10% in just 4 days. So we could subsequently see a potential 5 to 10% drop within just a couple of days as well. Now, the way that I would be setting up this bearish position is an entry around $17, setting a stop loss up around 1768, or a break above this bearish order block that's acting as resistance. From there, my target would be down at the 200 SMA at $16. I don't think that it will go much further than that within the short term, because that is where the 200 SMA is. It's also where we end up having this volume profile point of control on the 1 hour. If we zoom quickly out on the 4 hour, you're going to see that this $16 level that we were talking about shorting to also lines up with the 0.618 Fibonacci and the 0.73 Fibonacci, as well as the 200 SMA, which is a high confluent area. There's a very good chance that we would bounce there. So I think the move is shorting down to 16. If you're somebody who doesn't short or doesn't want to get puts, the move really is waiting until $16 to go long, which is something else that I might end up doing. If all of this doesn't make sense to you, go to our Discord. It's free. Go to the courses and seminar section and take our free courses. We have an introduction to the stock market course, a technical analysis course, and a disciplined traders course. Thank you guys for all the support, and I'll keep you updated tomorrow. Peace.